As global markets continue to shift under the weight of economic uncertainty, rising geopolitical tensions, and rapid technological transformation, the financial landscape is entering a phase that many analysts describe as one of the most consequential transitions of the modern era, reshaping not only how nations manage their resources, but also how power is distributed across the world. The United States, which for decades stood as the undisputed center of global finance, is now confronting a series of challenges that are testing the resilience of its economic model. From soaring national debt and persistent inflation to weakening international confidence in the long-term stability of the dollar. These pressures are not isolated events, but interconnected symptoms of structural problems that have been growing for years, gradually eroding the assurances that once made the U.S. financial system the trusted foundation for global markets. At the same time, emerging economic powers have begun capitalizing on these vulnerabilities by developing strategies that reduce dependence on the dollar while strengthening their own financial sovereignty. Among these nations, China stands at the forefront, implementing long-term policies that reflect a clear and deliberate strategy aimed at reshaping the global financial order in its favor. Through the accumulation of gold, expansion of non-dollar trade agreements, and investment in alternative financial infrastructures, China is signaling that the future will not revolve around a single dominant currency, but will instead reflect a more diverse and competitive monetary system. While the U.S. continues to rely heavily on debt-driven mechanisms to sustain its economy, China is building a foundation based on tangible assets, strategic partnerships, and disciplined long-term planning. This evolving dynamic is prompting countries around the world to reconsider traditional alliances and explore new opportunities that offer greater independence and protection from global volatility. As more nations diversify their reserves, reduce reliance on Western financial systems, and seek out alternative economic pathways, the balance of power begins to tilt toward a multipolar structure where influence is shared among several major actors rather than controlled by one. In this shifting environment, governments, investors, and institutions must navigate a world that is no longer defined by the old rules, where economic strength is measured not only by GDP or market size, but by resilience, adaptability, and strategic foresight. The decisions being made today will shape the global order for decades, influencing how wealth flows across borders, how nations engage in trade, and how currencies compete for international dominance. The momentum behind these changes continues to build as financial pressures intensify, supply chains reorganize, and geopolitical rivalries deepen, all contributing to a world where traditional assumptions can no longer be relied upon. This moment represents both a risk and an opportunity, depending on whether nations adapt to the new realities or cling to systems that are rapidly losing relevance. The world is moving into a period where economic influence will be earned through innovation, stability, and long-term vision rather than inherited through historical advantage. As the foundations shift beneath the global financial system, the question is no longer whether change is coming, but how quickly it will unfold and which nations will rise to shape the new era that lies ahead. As the global economy undergoes this profound transformation, nations are increasingly recognizing that the traditional financial structures they once depended on are no longer capable of providing the stability and predictability needed for long-term growth, prompting them to reassess not only their economic priorities, but also the alliances and systems that have guided international trade for decades. The United States, faced with escalating debt burdens, rising political polarization, and diminishing trust in its fiscal discipline, finds itself under growing scrutiny from both allies and competitors who worry that the pillars supporting the dollar's dominance are gradually weakening. This uncertainty is pushing many countries to accelerate their shift toward diversified reserves, alternative currencies, and new financial systems designed to insulate them from the risks associated with over-reliance on a single global monetary leader. China has emerged as the primary architect of this new financial landscape, leveraging its expanding economic influence, technological advancements, and strategic partnerships to reshape the global order in ways that better serve its long-term ambitions. Beijing's push for yuan-denominated trade, its rapid expansion of gold reserves, and the development of alternative payment networks all point to a coordinated effort aimed at reducing the world's dependence on Western-controlled financial structures. This strategy goes beyond economics and reflects a broader geopolitical vision in which China positions itself as a stabilizing force amid global uncertainty, offering countries an alternative pathway that promises resilience, independence, and a more balanced distribution of power. As more nations adopt these alternatives, even gradually, the shift in financial influence becomes increasingly visible, signaling to the world that the era of unchallenged U.S. monetary dominance is slowly giving way to a more fragmented, competitive, and multipolar system. At the same time, technological innovation is accelerating the pace of change, with digital payment platforms, blockchain-based systems, and central bank digital currencies offering new tools that can bypass traditional banking networks and reduce vulnerability to sanctions, political pressure, and currency volatility. These advancements allow countries to conduct trade with greater efficiency and security while reducing their exposure to economic disruptions originating from the West. For resource-rich nations, the appeal of these systems is especially strong as they seek to protect their commodities, stabilize their revenues, and gain more control over the terms of their international trade. Meanwhile, investors across the world are carefully monitoring the situation, recognizing that the structural shifts now underway could redefine the global financial order for generations. Many are transitioning toward assets that offer long-term value and reduced exposure to geopolitical risk, such as gold, strategic commodities, and sovereign wealth funds that prioritize tangible investments over speculative financial instruments. These adjustments reflect a broader trend of caution, as uncertainty surrounding debt-driven economies, central bank policy, and geopolitical conflict makes traditional markets more vulnerable to sudden shocks. In this environment, nations must make critical decisions about how they will navigate the next phase of global economic evolution, balancing their historical alliances with emerging opportunities that promise greater autonomy and stability. The decisions they make will shape not only their own financial security, but also the structure of the global economy, influencing the flow of capital, the role of major currencies, and the balance of economic power for decades to come. With every policy shift, every trade agreement, and every adjustment in reserve strategy, the world moves further away from the era of a single dominant financial power and closer to a future defined by shared influence, strategic competition, and a more complex web of global interdependence. As these global forces continue to reshape the financial landscape, the divide between nations that adapt early and those that resist change becomes increasingly visible, creating a new hierarchy in which economic strength is defined not by tradition, but by the ability to anticipate and respond to emerging realities that are transforming the very foundations of international commerce. The United States, once seen as the unquestioned center of financial stability, now faces the growing challenge of defending its position in a world where confidence in its monetary leadership is slowly eroding due to rising debt levels, political gridlock, and long-term fiscal uncertainties that cast doubt on its ability to maintain the strength of the dollar. These concerns are not limited to rival nations. Even long-standing allies are exploring ways to secure their economies by diversifying their reserve holdings, engaging in local currency trade agreements, and strengthening regional financial networks that reduce dependency on dollar-based systems. China has positioned itself at the heart of this transformation by developing a comprehensive, multi-layered strategy designed to expand its influence across global markets while creating parallel structures that circumvent Western control. This includes building large-scale gold reserves to support monetary stability, forging partnerships with resource-rich regions through initiatives like the Belt and Road, and promoting the yuan in energy, manufacturing, and infrastructure deals that anchor other nations to its economic orbit. These efforts are supported by technological innovation as China continues to advance digital currency systems and alternative payment networks that allow countries to bypass traditional financial pathways and conduct trade with greater autonomy. In contrast, many Western economies are struggling to adapt to the rapid pace of change, weighed down by internal political divisions, aging infrastructure, and financial models that rely heavily on debt expansion and short-term monetary interventions rather than long-term strategic planning. This fragmentation is amplified by global supply chain reorganizations as companies redirect production away from vulnerable regions and toward countries offering greater stability, lower costs, or stronger political alignment. These shifting dynamics are gradually redrawing economic alliances as nations seek out partners that support their long-term goals and provide insulation from the volatility and uncertainty that have become hallmarks of the current global environment. Meanwhile, financial markets are responding with heightened sensitivity as investors recognize that the traditional assumptions underpinning global trade and currency dominance are no longer guaranteed. This has led to a steady movement toward tangible assets, strategic commodities, and long-term stores of value that offer protection against inflation, currency devaluation, and systemic risk. Gold, in particular, has seen renewed interest, not only from governments, but also from private investors who view it as a hedge against the disruptions unfolding across global markets. As more countries adjust their economic strategies to align with the emerging multipolar system, the pressure on existing financial structures intensifies, forcing policymakers to confront the reality that the old model of a single dominant currency cannot indefinitely support a world defined by rapidly shifting power dynamics, expanding regional partnerships, and increasing geopolitical fragmentation. Instead, nations must navigate a complex landscape where financial influence is distributed across multiple centers of power, each with its own vision for the future. This evolving competition is shaping the policies of both established and rising economies as they seek to secure their place in a world where economic strength is contingent upon resilience, innovation, and the ability to adapt to transformational global trends that are redefining the nature of international finance. With every passing year, it becomes clearer that the transition now underway is not temporary or cyclical, but structural and enduring, signaling the beginning of a new era where success will depend on recognizing these shifts and positioning accordingly before the global balance of power settles into its next long-term equilibrium. As the forces driving global financial realignment continue to intensify, the world is witnessing a gradual but unmistakable shift away from the centralized, dollar-centric systems that defined the previous century and toward a more complex, diversified, and strategically competitive monetary landscape that is still taking shape. This transformation is being accelerated by a combination of geopolitical tensions, technological breakthroughs, and structural weaknesses within traditional economic powers, particularly the United States, whose financial model is increasingly strained by its dependence on debt expansion, political polarization, and monetary policies that often prioritize short-term solutions over long-term stability. These vulnerabilities have encouraged many countries to reconsider the risks associated with relying heavily on the dollar, leading them to explore strategic alternatives that promise greater autonomy, reduced exposure to Western political influence, and a more balanced distribution of economic power. China's strategic rise has played a central role in this shift, as it continues to build a comprehensive financial ecosystem designed to bolster its own resilience while offering partner nations pathways to conduct trade and manage reserves without depending on Western systems. Through initiatives focused on trade in local currencies, the expansion of yuan-based financial infrastructure, and the steady accumulation of gold, China is not simply responding to global uncertainty, but actively shaping the contours of the next monetary era. These moves signal to the world that China is preparing for a future where economic influence will be measured by control over real assets, diversified partnerships, and technological leadership, rather than solely by the scale of a nation's financial markets or the reach of its currency. Meanwhile, many regions across Asia, Africa, the Middle East, and Latin America are seizing this moment to reassess their economic priorities, forming new alliances that reflect shared interests and strategic goals rather than historical loyalties. This growing web of partnerships is strengthening the trend toward multipolarity as countries invest in infrastructure, resource exchanges, and financial networks that operate independently of Western oversight. At the same time, technological innovation is reshaping the foundations of global finance with digital currencies, blockchain-based settlement systems, and alternative payment networks reducing the relevance of traditional banking pathways and allowing nations to conduct cross-border trade with greater efficiency, transparency, and protection from sanctions or economic pressure. These developments are fueling a wave of experimentation among central banks as they explore new monetary tools that could redefine how currencies function on a global scale. For investors, institutions, and policymakers, the emerging landscape requires a new mindset, one that acknowledges that the rules governing economic influence are changing, and that the assumptions that once guided financial strategy can no longer be taken for granted. Markets are becoming more sensitive to geopolitical shifts, supply chain realignments, and reserve diversification trends, prompting a renewed focus on assets that offer long-term resilience instead of short-term gains. Tangible stores of value, especially gold, are once again becoming central elements of national financial security as countries recognize that physical assets provide protection in ways that heavily leveraged financial instruments cannot. As more nations follow this path, the structure of global finance gradually transitions from dependency on a single dominant reserve currency to a system grounded in multiple centers of influence, each competing to shape international standards and set economic direction. This period of transition is marked not only by competition, but also by opportunity, as countries that adapt quickly to the new realities position themselves to thrive in a world where economic power is diffused, alliances are fluid, and financial systems are interconnected in increasingly complex ways. The momentum driving these changes is unlikely to reverse, as the combination of geopolitical tensions, shifting economic priorities, and emerging technology continues to push the world toward a future where influence is distributed across nations that demonstrate foresight, stability, and strategic depth. The global order that once revolved around a single monetary superpower is giving way to a more dynamic structure. And those who understand the significance of this transformation will be best prepared to navigate the challenges and opportunities that define the new era of international finance. As the world moves deeper into this unfolding economic transformation, it becomes clear that the shifts occurring today are not temporary adjustments, but structural changes that will redefine the distribution of global power for decades to come, creating a financial environment in which nations must rethink their strategies, their alliances, and the foundations of their economic security. The United States, long regarded as the anchor of global stability, now finds itself in a position where it must defend the credibility of its economic system as rising debt levels, contentious political divisions, and wavering fiscal discipline raise questions about its long-term reliability as the world's primary financial center. These uncertainties are prompting countries to explore new pathways that allow them to reduce exposure to potential vulnerabilities within the Western-led monetary framework, especially as geopolitical conflicts and economic sanctions demonstrate how dependent financial systems can quickly become pressure points in international disputes. China and other emerging powers see these conditions as an opportunity to advance their own vision of a more balanced and multipolar world, one in which influence is shared among multiple economic centers rather than concentrated in a single nation. By expanding gold reserves, deepening regional trade networks, accelerating the adoption of local currency agreements, and investing in advanced financial technologies, these countries are laying the groundwork for a monetary landscape where their currencies and economic systems play a far more significant role in global commerce. This progression is reinforced by nations across Asia, the Middle East, and Africa, many of which are embracing new partnerships that provide stability, infrastructure, and financial independence in place of older arrangements that often came with rigid political or economic conditions. These evolving alliances are creating a network of interconnected economies that can support one another during periods of volatility and act collectively to reshape the balance of global trade. At the same time, technological innovation is accelerating changes that would have once taken decades, as digital currencies, decentralized payment platforms, and blockchain-based settlement systems introduce new possibilities for cross-border commerce that bypass traditional banking channels and reduce reliance on a single dominant currency. These tools are enabling countries to insulate themselves from financial restrictions, conduct faster and more secure international transactions, and build monetary systems that function independently of external political pressure. Investors and institutions are also adapting to these shifts, recognizing that the values underpinning financial stability are evolving and that long-term security now requires a diversified approach grounded in tangible assets, strategic commodities, and resilient economic partnerships. Gold is regaining prominence as a cornerstone of national financial strategy, not merely as a hedge against inflation or market volatility, but as a foundation for monetary credibility in an era where trust in major currencies is increasingly tied to a nation's ability to back its financial commitments with real, immutable value. As more countries strengthen their reserves and expand the role of gold within their financial systems, the global economy moves further away from an era defined by a single reserve currency and closer to one characterized by multiple overlapping spheres of influence. This multipolar reality introduces new complexities, but also new opportunities for nations willing to adapt, innovate, and build sustainable economic strategies that reflect the emerging dynamics of global power. The transition now underway marks the beginning of a profound realignment that will shape everything from international trade to currency valuation to geopolitical strategy, influencing how nations cooperate, compete, and secure their interests in an increasingly interconnected world. Those who recognize the significance of this shift and prepare accordingly will be positioned not only to withstand the challenges of a changing financial order, but to shape the contours of the next era of global economic leadership. The transformation is already in motion, and with every policy adjustment, every alliance formed, and every strategic investment, the world moves closer to a future where financial power is distributed among nations that demonstrate the foresight, discipline, and resilience required to thrive in the new global system that is steadily taking form.